Today we're going to talk about using a whole life insurance policy as collateral for a loan. This is called leverage. It can be a great option if you're looking for another way to finance your business or your investments. We're going to talk about how to leverage the whole life policy in Canada. We're going to start by looking at the two sources that you can borrow from and then discuss the pros and the cons of each. The first source is getting the loan from the insurance company itself. This is the insurance company where you got the policy in the first place. And doing this is called a policy loan. And it's super easy to do. You fill out a one-page form, send it to the insurance company. When the insurance company reviews the form, they send you the money. This usually takes 2 to 3 days for a direct deposit, or like a week, 10 days if you ask them to mail a check. The second source is using a third party like a bank. This takes a little bit more time to set up, obviously still very doable. And so when you go through this process, what you do is you request the loan and you use the insurance policy as collateral. So these insurance policies are an excellent form of collateral. And that's because it contains tons of cash value. And when you offer this policy as collateral, banks will generally lend you 80, 90, 100% loan to value against it. There's 5 reasons why you would borrow from the insurance company directly. So number 1, it's super easy. Literally, it's a one-page form that you send in and you get the money. There's no credit check or anything like that involved. Super easy. Number 2 is that you can ask for any amount you want. So it could be as low as $1,000. So as long as you've got cash in the policy, you can take a policy loan from the insurance company. Third, you set the repayment terms. So the insurance company is holding your cash, plus they have life insurance on you. So they're fully secured and they're happy for you to pay them back however you want to pay them back, if you want to pay them back. You can pay these loans back in a lump sum. You can do none today, monthly, some now, some later, whatever fits your situation. Fourth, when you pay interest on the loan, that money goes into what's called a participating account. And the participating account is what pays the dividends that makes your policy grow. We're going to talk about more detail of this in another video, but the point is that you're sort of paying yourself back, and that actually feels kind of good. Number 5, the loans that you take from an insurance policy are private and they don't show up anywhere, except for on the insurance company's books. There is a ton of value to having financial privacy these days. There's also 2 main reasons why you might not want to use the insurance company to borrow money. They're not bad reasons, and there's definitely not a reason not to move ahead, but I just want to let you know about some of the cons. Number 1 is that the interest rate is a bit higher, but the ease and the privacy and the convenience usually are worth it. So right now in 2021, depending on the insurance company you're working with, it's between 4 to 7.5%. Number 2 is the policy loan is a policy loan. There aren't any other types of loans that you can get from the insurance company. So it's really, you're just getting straight up a policy loan. Now, let's look at the pros and cons of borrowing directly from a bank. The biggest reason to borrow from the bank is that the interest rate is low. Right now, it's around prime, maybe prime plus 0.5 or prime plus 1. And for larger policies, we can even do prime minus. But really, it depends on the loan underwriting. Another reason is that you can get different types of loans, like a line of credit or a demand loan. This really depends on the bank that you work with, and they all offer different types of loan facilities on insurance policies. Number 3, just like the bank offers different loan types, they also give you access to different loan terms. So this can include an immediate financing arrangement, this can include cash surrender value lending, or an insured retirement plan. And there's others. So all of these have different terms and conditions, and we will work with you to figure out which option is most suitable for your situation. Because these types of loans are done through private banking, you build a better relationship with the bank. A good banking relationship helps with all other lending needs in your life, including loans for your business, for your car, your home, your real estate, whatever it is. This is especially important for real estate investors who can set up a world of lending to help them build their property portfolio bigger and more quickly. Basically, you give them this loan business and then they treat you much better and give you way more money. Sounds good, right? What about the cons of borrowing from a bank? Number 1, it's way more involved. There's a full personal and corporate financial underwriting, which leads to the next point. Number 2, it takes some time to set this thing up in the first place. So like a couple months of time. But once the loan facility is set up, things run very quickly. Number 3 is that there's much higher minimum requirements. The banks don't want to see this loan unless you're putting a minimum of about $100,000 a year or more into your insurance policy. And $100,000 is really the bare minimum. We have clients putting in millions of dollars per year into these policies, and that's really what the bank wants to see. Number 4 con, banks charge fees. There's bank fees, lawyer fees to set up these accounts. There's also annual maintenance fees. These fees are not outrageous, and we can usually find a way to get them covered, but you know how bankers are. They charge fees. By now, you have a pretty good understanding of insurance policy leveraging in Canada, and whether you go with the bank or an insurance company really depends on your circumstance today. Whatever decision you make, I really want you to achieve your leverage goals without any hiccups. Thanks for watching. So if you enjoyed this video, please hit subscribe, hit like, write a comment, and share. And if you like this video and you like this type of advice, go to our website, safepacific.com/contact, and fill out the form, and I will reply to you within 24 hours and we'll set up a meeting time. Thanks so much for watching. We'll see you on the next one.